I remember waking up every morning wondering how long my salary could actually protect me from unexpected bills and rising living costs. For years, I believed working harder was the only way to feel safe, even though my paycheck never truly felt secure. If you are watching this, chances are you have asked yourself whether relying on a job alone is enough anymore. Before we go further, if content like this helps you think clearly about money, gently support the channel by liking this video. It tells YouTube this conversation matters, and it helps more regular people discover practical financial ideas without confusion. Also, feel free to share this video with someone who worries about money but does not know where to start. And if you want clear, honest videos about income, freedom, and long-term thinking, subscribe so you never miss new releases. I am Alex, and today I want to show you the fastest realistic way I replace my salary with dividend income. This is not about becoming rich overnight or chasing risky shortcuts that collapse when markets change direction suddenly. Instead, it is about building income streams that pay you consistently, even when you stop actively working every day. Many people think living off dividends requires millions of dollars, but that belief keeps them stuck and discouraged. I used to believe that too, until I finally sat down and broke the numbers into simple, understandable pieces. When I did, I realized replacing a modest salary was far more achievable than most people are ever taught. For this video, I will focus on a clear target of $2,900 per month. That equals about $35,000 per year, which already covers basic living expenses for many households. Your number may be different, but the process I shared today works the same at almost any income level. What matters is understanding where the income comes from and why certain strategies reach that goal faster. Dividend income means your investments pay you regularly without selling assets or constantly checking market prices. Think of it as your money working quietly in the background, sending cash while you focus on living your life. Once you understand this shift, your entire relationship with work, stress, and financial security begins to change. The first thing I had to understand was why salaries feel stable, but often fail as inflation quietly reduces real purchasing power. Every year, prices rise steadily, while most salaries increase slowly, meaning the same effort buys less freedom over time. That uncomfortable truth pushed me to search for income sources that adjusted automatically instead of depending on raises. I realized trading time for money alone was fragile, especially when jobs can disappear without warning. Dividend income stood out because it creates cash flow without requiring constant effort or active daily work. At its core, dividends are simple because you own pieces of businesses that share profits with owners. When companies earn money, they can reinvest for growth or return part of those profits to shareholders. As a shareholder, I receive those payments simply for ownership, not for working additional hours. Dividends may arrive quarterly or monthly, but the real value is predictable income you can plan around. What makes this powerful is the ability to live on income without selling the investments themselves. Selling assets feels like slowly dismantling your future, while dividends allow your foundation to remain intact. I often compare dividend investing to owning a rental property and living comfortably from rent payments. In this case, stocks replace tenants, companies replace buildings, and dividends replace monthly rent checks. Your shares become income-producing assets that continue paying as long as businesses remain profitable. This mindset shift helped me stop obsessing over daily market swings and short-term price movements. Instead of asking how high a stock could rise, I began asking how reliably it could pay me. That single question filters out many flashy investments that look exciting but fail over longer periods. When income becomes the focus, investing feels calmer, slower, and far more intentional. The next logical question then becomes how much capital is actually required to replace a salary? This is where understanding dividend yield transforms vague financial dreams into clear, achievable numbers. Dividend yield simply shows how much income an investment pays each year relative to the price you pay. If a stock pays $10 annually and costs $100, the yield equals 10% roughly. Understanding yield helps me estimate how much money I need invested to generate reliable monthly income over time. Once I knew the target income, the math stopped feeling intimidating and started feeling surprisingly empowering for me. Replacing $2,900 monthly became a clear equation instead of a vague financial dream goal. At this point, I focused on strategies that could realistically reach that number faster than traditional dividend stocks. The first strategy that changed everything for me involved something called covered call exchange traded funds, or ETFs. Covered call ETFs generate income from dividends and option premiums, creating two income streams simultaneously for investors today. To understand this, imagine owning stocks and selling the right for others to buy them at agreed prices. Those option buyers pay fees up front, which the fund collects and distributes as income to shareholders regularly each month. This structure allows covered call ETFs to pay higher yields compared to many traditional dividend stocks over time. However, I learned quickly that higher income comes with trade-offs investors must clearly understand before committing real money. Covered call strategies can limit upside when markets surge, because stocks may be sold early at fixed prices. For income-focused investors like me, that trade-off felt acceptable when cash flow mattered most each single month. Based on recent data from ETF providers, yields often range between 8 and 12% depending on markets. At those yields, replacing $35,000 annually requires far less capital than people expect initially today. Roughly speaking, I calculated needing around $300,000 invested to reach my target using current yields. Compared to needing millions with low-yield stocks, this approach dramatically shortened my timeline toward real financial independence. Still, I never recommend putting everything into one strategy because balance protects you emotionally during volatile market periods. That understanding sets the stage for the next strategy, which offers income through real estate investment trust structures. The second strategy that helped me move closer to stable income involved real estate investment trusts, commonly known as REITs. REITs allow everyday investors to earn income from large real estate portfolios without buying properties themselves. These companies own apartments, offices, warehouses, and shopping centers, then distribute rental income to shareholders regularly. I like REITs because they turn physical real estate into simple income-producing shares anyone can buy easily. Many REITs are legally required to pay out most profits, which often results in attractive dividend yields. Some REITs even pay dividends monthly, making them appealing for people covering regular living expenses. Historically, reputable data sources show diversified REITs delivering competitive long-term returns alongside consistent income. However, REIT income can fluctuate when interest rates rise or when economic conditions weaken unexpectedly. Understanding that risk helped me avoid emotional decisions during periods when real estate headlines looked frightening. Based on recent average yields, replacing $35,000 annually requires roughly $300,000 invested. That number may change, but it remains far lower than what many people assume retirement income requires. I learned that spreading money across multiple REITs reduces risk instead of relying on a single property type. Diversification matters because apartments, offices, and warehouses respond differently to economic cycles over time. This approach allowed me to enjoy steady income while avoiding the headaches of managing tenants or repairs. For long-term investors, REITs can quietly compound income while reinvested dividends purchase additional shares automatically. That compounding effect becomes powerful when combined with patience and consistent contributions over several years. Still, REITs are not magic, and they should complement other income strategies rather than replace them entirely. By blending REIT income with other approaches, I felt less exposed to any single economic risk. This balance helped me sleep better, knowing my income came from different sources working together quietly. Next, I want to explain a more conservative strategy that prioritizes reliability over speed and higher yields. The third strategy focuses on dividend aristocrats, companies known for paying and increasing dividends consistently over decades. These businesses have raised dividends for at least 25 consecutive years, proving resilience across many economic cycles. I trust dividend aristocrats because consistency matters when income must arrive, regardless of headlines or market emotions. Well-known examples include large industrial, consumer, and healthcare companies with stable demand and predictable cash flows. Compared to other strategies, dividend aristocrats usually offer lower yields but far greater reliability and long-term stability. For income-focused investors, this means slower progress initially, but less stress during market downturns or recessions. At average yields around 6 to 7%, replacing $35,000 requires higher starting capital. Roughly speaking, I calculated needing about $500,000 invested using dividend aristocrats alone. While that number seems high, it remains far below what traditional low-yield saving strategies would require. I view dividend aristocrats as the foundation of my income portfolio, not the fastest growth engine. Their steady increases help income keep pace with inflation, protecting purchasing power slowly but reliably over time. Another advantage is emotional comfort, because these companies rarely surprise investors with sudden dividend cuts. This predictability allowed me to focus on long-term planning instead of reacting to short-term market noise. However, relying only on conservative stocks can delay financial independence if income goals are ambitious. That realization pushed me to think in terms of combining strategies instead of choosing just one approach. Each strategy serves a purpose, balancing speed, stability, and risk depending on personal priorities. When blended properly, income becomes smoother and less sensitive to changes in any single market sector. This combination mindset transformed investing from stressful guessing into a structured, repeatable system for me. Once structure replaces emotion, progress becomes measurable, calmer, and far easier to sustain long term. Now I want to show how combining these strategies creates a realistic path toward replacing a salary. Combining strategies allowed me to prioritize income now, while still protecting long-term growth and financial resilience during uncertain markets. Instead of chasing perfection, I built a portfolio where different assets supported each other through changing market conditions. Covered call ETFs handled aggressive income generation, while REITs and dividend aristocrats provided balance and stability during volatile periods. This structure reduced anxiety because no single investment needed to perform perfectly every single year across unpredictable economic cycles. When markets fell, income continued flowing, reinforcing my confidence that the system worked beyond short-term price movements. I also learned that replacing a salary does not require quitting work immediately or making reckless decisions prematurely ever. Many people gradually build dividend income alongside employment until cash flow comfortably covers essential living expenses every single month. That gradual approach lowers stress, improves discipline, and prevents emotional mistakes driven by fear or impatience during investing journeys. Throughout my journey, simple automation played a huge role in maintaining consistency and avoiding unnecessary temptation over long periods. Reinvesting dividends early accelerated growth, allowing income to compound faster before transitioning toward living expenses sustainably long term. As income grew, I slowly redirected dividends from reinvestment toward covering real monthly bills and necessities consistently reliably. This transition phase required patience because rushing withdrawals too early can weaken long-term income potential significantly over time. I tracked progress carefully, focusing on cash flow trends rather than obsessing over daily account values or headlines noise. That mindset shift helped me stay committed even when markets felt uncertain or temporarily uncomfortable for extended periods. Replacing a salary ultimately becomes less about timing markets and more about disciplined systems built consistently over years. Once systems are established, income grows predictably, regardless of headlines, opinions, or daily market narratives and noise cycles. This is why I believe financial freedom comes from structure, patience, and realistic expectations about income goals long term. Not every month will feel perfect, but steady dividends smooth the journey over time for ordinary people everywhere. Understanding this prepares you mentally for the final steps toward confidently replacing your salary with dividend income streams. In the final part, I will summarize the framework and help you think about your own next steps. Before wrapping up, I want to simplify this entire approach so anyone can remember the core ideas easily. First, focus on income replacing expenses, not chasing impressive portfolio values that fluctuate emotionally every day. Second, choose strategies based on cash flow reliability rather than excitement or popular opinions online. Third, accept that faster income usually involves trade-offs, while safer income often requires more patience initially. When those principles guide decisions, investing stops feeling random and starts feeling intentional and repeatable long term. I also encourage people to adjust goals realistically because replacing part of a salary already creates freedom. Even $500 or $1,000 monthly from dividends can dramatically reduce stress and improve life choices. Progress builds momentum, and momentum strengthens confidence when markets test your patience unexpectedly over time. This journey rewards consistency far more than intelligence, luck, or perfectly timed decisions ever could. If you feel overwhelmed, remember every portfolio starts small and grows through steady action, not dramatic leaps. I made plenty of mistakes early, but learning slowly protected me from catastrophic losses and regret later. Education matters, yet applying simple ideas consistently matters far more than knowing complex financial theories deeply. The fastest path often looks boring from the outside, but boring systems quietly change lives over years. As dividend income grows, options expand, giving you leverage over work, time, and personal priorities gradually. That leverage creates freedom to say no, slow down, or redesign life on your own terms. Financial independence is rarely dramatic, but it feels deeply calming when income arrives without constant effort. I want you to view dividends not as magic, but as tools serving clear, practical purposes. Once tools are understood, fear fades, and confident decision-making becomes much easier over time. At this stage, the framework should feel approachable, realistic, and achievable for regular people. In the final moments, I will encourage reflection and invite you to engage thoughtfully with the channel. As we reach the end, I want you to pause and honestly consider what financial security truly means for you. For me, it meant knowing basic expenses were covered regardless of job changes, market downturns, or unexpected life events. Dividend income created that stability gradually without dramatic moves or constant stress about daily financial decisions over many years. I did not wake up wealthy overnight, but I slowly gained control over how I spent my time. That control allowed me to work by choice, not fear, which completely changed my relationship with money over time. If this framework makes sense to you, start by defining your own realistic monthly income target today clearly. Once the target is clear, reverse engineer the strategies and timelines needed to reach it responsibly without unnecessary risk. Avoid rushing, because impatience often destroys progress faster than slow markets ever could over long investment journeys alone. Remember that consistency beats intensity when building income systems meant to support you long-term financially reliably everywhere. Small, repeatable actions compound quietly, creating results that appear sudden only to those watching later from the outside. If this video helped clarify dividends for you, I would appreciate your support through a simple like right now. Comments also help this channel reach people who need practical, honest guidance instead of financial hype online today. Well, let me know below what monthly income number you are aiming for, even if it feels small today. Your answer matters because clarity is the first step toward building something real and sustainable for your future. If you want more videos breaking down income strategies in simple language, consider subscribing here for updates weekly. I share new content regularly focused on calm, realistic approaches to money and long-term freedom for everyone. Sharing this video with someone you care about could help them rethink their own financial path starting today. None of this requires perfection, only patience, honesty, and a willingness to start where you are right now. Financial freedom grows quietly when systems replace stress and income replaces constant financial uncertainty over time for families. Thank you for spending this time with me, and I look forward to continuing this journey together from here. Before closing, I want to address common fears that stop people from starting dividend investing confidently today successfully. Many worry about market crashes, but income-focused portfolios are designed to keep paying through volatility periods consistently. I learned that preparation matters more than prediction because no one controls markets or economic cycles forever completely. Diversification across strategies reduces risk, smoothing income even when one area temporarily underperforms during different market conditions globally. Another fear involves starting too late, but steady contributions can still build meaningful income over time consistently today. What matters most is beginning with clarity, patience, and systems that support long-term behavior, consistently financial growth. I encourage focusing on controllable actions like saving rates, diversification, and disciplined reinvestment habits over years, consistently, patiently. These actions compound quietly, regardless of headlines, political noise, or short-term market drama cycles globally today everywhere. Over time, confidence grows as income proves itself month after month without constant intervention from you personally required. That confidence changes decision making, helping you stay invested instead of reacting emotionally during stressful periods unexpectedly arising. Eventually, income replaces anxiety, freeing mental energy for relationships, creativity, and personal fulfillment without financial pressure constantly present. This emotional benefit often matters more than numbers because peace is the true reward for most people today. Replacing your salary is not about escaping work, but about choosing work intentionally with freedom and control daily. When income is secure, you negotiate life from strength instead of desperation and fear constantly present before decisions. That shift represents the real power behind building dividend income patiently over time for ordinary people everywhere today. If you reach this point, you now understand the fastest realistic framework I use to replace my salary. The next step is applying it thoughtfully, according to your own risk tolerance and timeline carefully defined personally. Start small, stay consistent, and allow income to grow without unnecessary pressure over time naturally for you personally. I hope this series empowers you to think differently about money and freedom starting today with confidence alone. Thank you again for watching, and I will see you in the next video very soon here together. As a final reminder, this framework works best when aligned with your personal values and realistic lifestyle expectations. Numbers matter, but sustainability matters more because income systems must support your life without constant stress over time reliably. I encourage revisiting this plan yearly, adjusting allocations slowly as income, goals, and risk tolerance change over time. Markets will fluctuate, but a diversified income approach helps smooth results across decades rather than months for most investors. Patience remains the hidden advantage most people underestimate when building dividend income gradually and responsibly over long periods. I recommend tracking cash flow monthly because consistency reveals progress better than occasional portfolio checkups over time clearly. Avoid comparing your journey to others online since different timelines and responsibilities create different outcomes for everyone uniquely. Focus instead on steady improvement, celebrating milestones as income grows and confidence strengthens naturally over time consistently thereafter. Replacing a salary rarely happens overnight, but persistence quietly compounds efforts into meaningful freedom for most people eventually. This is why I emphasize systems, not motivation, because systems continue working when motivation fades inevitably over time. If you stay consistent, dividends can become a reliable partner supporting choices rather than limiting them long term. I hope this video gave you clarity, confidence, and practical direction without overwhelming technical complexity for beginners everywhere. Use this knowledge responsibly, keep learning, and adapt as markets and personal circumstances change over time wisely today. Dividend income rewards discipline, humility, and long term thinking far more than bold predictions ever will consistently anywhere. As you move forward, remember that financial independence is personal, flexible, and deeply individual for everyone everywhere today. Design your plan to support the life you want, not someone else's expectations or comparisons online constantly today. Income gives options, and options create freedom when combined with thoughtful planning over time and patience consistency too. My goal is to help you build calmly, avoid hype, and stay focused on what matters most long term. If you found value here, continue learning, asking questions, and refining your approach patiently over years ahead confidently. I appreciate your time, your attention, and your commitment to building a more secure future for yourself starting now.